today's video, I'm going to give you an introduction and an overview to Goldbach, the Goldbach trading levels. Now, this video is not a substitution or a replacement for Hoppy's official book on Goldbach. If you really want to understand Goldbach and how to trade it, I highly recommend you purchase the book, and the link is below. Now, Goldbach is basically how every market is priced, be it Forex, futures, indices, commodities, crypto. I have seen Goldbach play out on everything, even single name stocks such as Tesla, Apple, Lockheed Martin. And essentially, Goldbach defines the dealing ranges based on mathematics. And within the dealing ranges, it also tells you exactly where ICT's PDAs will form. So everything from the rejection block, order block, fair value gap, liquidity void, breaker block, mitigation block, equilibrium, they are all predefined using mathematics, using the power of three numbers. And once you understand where these dealing ranges are forming, how big they will be, and where the order block and everything should form, you then can start using the various Goldbach algorithms to trade inside of a Goldbach dealing range or trade intra or between the ranges. So from one Goldbach range to another. Okay, so let's get into the charts and show you what I mean. So this is the DXY, which I've shown as my case study for previous explainers on Goldbach. So this essentially is the 243 Goldbach dealing range from the low to the high, and then we've also marked out equilibrium. Now, these aren't lines that have been created by a human. I haven't eyeballed anything and then drawn support and resistance lines. These lines are based purely on mathematics. Once you understand which power of three an asset is working on, and you know how to do the mathematics, which is explained in the book, you can create Goldbach lines for any asset. And the cool thing is, if I say to another Goldbach trader, hey, the current 243 equilibrium, right? Even if that Goldbach trader doesn't have this indicator, he or she will be able to calculate what I mean by the 243 equilibrium using mathematics, and we will have exactly the same number. So it's not subjective, it's not drawn by hand, and it's not form fitted. Now, how do they work? So basically, whatever the price is right now, so this is the spot price of the DXY, it's Sunday, so it's not moving, right? So if the price is here, right, if the price is currently 106,672, then the dealing range in which we are operating, the low is here, and there's the exact number, 104,490, and the high is there. And you've seen many a time, I have shown you algorithm 2 playing out on the DXY. Now, not only do you have this dealing range, the dealing ranges are basically stacked on top of each other. So if I draw it out like this to make it super clear, so this is the current dealing range from here to here. So that's the current dealing range based on the 243. There will be a dealing range below it. You see, there's the dealing range below it. And if I extend these lines out, you'll see price is within this dealing range. And there is a predefined dealing range above it. There we go. So in this way, the dealing ranges are stacked on top of each other, and you typically have algorithms that run within a Goldbach dealing range. There are also algorithms that will run from one dealing range and take us to another dealing range, right? But to learn this kind of stuff, you really have to have the book, and the book gives you access to the Discord, and then you can really get into the details on how to trade these Goldbach levels. Now, that's pretty cool, right? However, within a dealing range, Goldbach defines where the ICT premium discount arrays should form. So if I enable these, these levels, these partitions, tell you where the premium discount arrays will form. So the rejection block should form here, the order block should form here, and so on. So I've shown you many times that we had an algorithm 2 running that had the order block here, okay, that was the order block. It formed a fair value gap. Now it doesn't have to exactly start at the line, but you're expecting it in this level. There's your fair value gap. There's your liquidity void. This is a breaker in the breaker level. Okay, so the algorithm that we ran, and you can get more details in the book, was something called algorithm 2. It goes from the rejection block to the breaker block to the fair value gap. You can see the body is respecting it, to the opposite order block. Once you know how to identify which power of 3 dealing range is running and which algorithm is running, trading becomes very easy and the ICT setups make sense. His classic setups start making sense. Now, not only do we have a 243 dealing range, within a dealing range you have fractal Goldbach dealing ranges. What do I mean by this? So let's keep this. Let's remove this. So this is the current dealing range that we're in. If I draw a partition like this, so I've just basically split this into thirds. So you have the bottom third, which is the discount. You have the top third, which is the premium, and you have the middle third, that's equilibrium. Now, what is a third of 243? It's the next power of 3 down, 81. So the 81 dealing range, you have 3 of them within a 243. You have one here, one here, one here. So let me demonstrate. And now the chart may get a bit messy, so bear with me. What I'll do is I'll remove, well, let's see how it looks. So this is the 243, high, low. Price is currently here. This is the 81, low, high. And then if we drop it down one, this is the premium 81 in the 243. This is the equilibrium 81 in the 243. And if you were to drop it down again, this is the discount. Where do we want to trade according to ICT principles? If we're looking for longs, we want to retrace into a discount. If we're looking for shorts, we want to short from the premium. So I hope that makes sense. Now, there's a lot more to that. For example, if we go back to the 243, we have something called the high, and then we have an extension, both at the top and at the bottom. What is the extension? The extension is, so when we were looking at the premium, equilibrium, and discount using thirds, we were using the 81. This extension is actually a fractal power of 3 dealing range called the 27. Now, I wonder if we can get up there. Let's mark it out first. So this is the 27. So this is the extension. This is the 27. If we then change the indicator to show us the 27 range, you'll see the red line is the low, this is the high. Price action does amazing things in here. And once you understand what this is used for by the algorithm in relation to the main 243, what the extensions do, trading becomes a lot easier and things make sense. Okay, so to summarize, when it comes to the fractal Goldbach levels, you have the main one you're looking at based on the time frame you trade. So in this case, on the DXY, I've been showing you the algorithm 2 playing out on the 243 on the 4 hour. Within the 243, we have a premium, an equilibrium, and a discount. These are 81s. On lower time frames, algorithms play out on the 81 also. So you may see something playing out on the 15-minute for an 81. And then once you understand how the extension is used, you can use price action within this zone to take on trades, let's say. As always, if you have any questions, leave a comment in the YouTube description below. A link to Hoppy's official book on Goldbach is also linked below. That has a lot more information. I've just given you the bare bones. His book contains a number of algorithms and trading plans that you can use based on Goldbach. And then, of course, my Golden Bullet flagship mentorship is live. So if you'd like to book a call with me and go over my strategy on how I trade Goldbach using ICT principles, feel free to click the link below.
Remember, all I'm offering is the truth, nothing more.